Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, March the 29th. The year's 2023. Let's talk trading. Price, action, state change. These videos are for educational purposes only. Your results may differ from mine. I think I introduced the new price action state change that I've come up with. Oh, I think it was last week. Maybe it was the Friday or Sunday video. And I guess I kind of, actually, it was a little bit before then too, because I think a couple times Walmall and we talked about it, but I don't think I dedicated a video or two to it. So we're going to get into it. And hopefully some of the traders over on StockFetcher, the equity traders, might tag along because yesterday I took some time and I did some filters and somebody goes, "Whoa, TRO's back, but for how long?" It's funny. It was literally 20 years ago, it seems, when I developed some of the stock fetcher filters out there. The one, the logic system, because stock fetcher doesn't come with and or not, and it's really hard to code if you don't have those fundamental logic pieces. So I came up with a way to implement those, and it kind of took stock fetcher to the next level. So price action state change here. We'll go over the basics. State change. There are four states. You look at candles or bars, and there's only four types. You either have higher high, higher low. You have lower high, lower low. You have higher high and lower low, or you have lower high and higher low. So you have higher highs, higher lows, lower high, lower low, outside bar, inside bar. That's it. Those are the only four states. And so the question is, what happens when the state changes or doesn't change? And how can you use that in your trading? So what I did was I wrote an indicator. I wrote a few indicators. We've got state change, we've got state change bars, and we've got state change history, depending on how you like to play it. And what I've realized is that what you might want to do is only trade if there was a state change on the previous bar. So you can see here, there wasn't a state change. So in the 1 minute, there was no trade to take. But if you move up to the 5 minute, you can see the previous bar was an inside bar. And on these inside bars, what do? You want to take the breakout. Now on the M5, we had a state change on the last bar from inside to higher high, higher low. So that's indicating you just might want to take this breakout. And we can sit here and watch and see what happens. Now, the thing is, this is where you should have traded, because you had a state change from here to here, no state change, and then a state change. So on the state change, now you look to take the trade. So actually, the trade would have been here at the high of the inside bar right here. And you can see there were pips to be made. So that's what I've been doing, is I just wait for a state change, and then I trade. And then what you can do, you can basically trade state change to state change. You get in the trade, then you stay in the trade until there's a state change. Of course, you have to use money management and stop loss. But you can see here, there was a state change. If you took the breakout, there was money to be made. no state change. Here there was a state change. Once again, you can come back down. Now, of course, you can use some other price action fundamentals where you can see here it failed to make a high, and then all of a sudden the bar turned red, and it was just like, maybe I'll take that short. But if you don't, if you actually wait, like if you were coding, you'd say, okay, state change, take the breakout, boom. And once again here, state change, take the breakout, state change, take the breakout, state change. You can see here, it starts to consolidate. Once again, you know, if you're doing discretionary changing, you can see here, it's kind of, it looks like it's kind of ranging. This bar, this is an inside bar to this bar. This is an inside bar to this bar. This is an inside bar. This is, so you see you have a master candle setup happening here. And what would you usually do? Well, probably you look to take the breakout. See, to the south side, it wouldn't have worked, but to the north side, it would have worked. That's why you have your stop losses. So you see, once again here, had you taken that breakout, you would have had, you know, maybe 4 or 5 pips to the good, but failing to take the profit, you see you right back where you were. And then once again, you kind of look left, you can see here, price pushed down from this level. It didn't break it. So you see here, it went up, came back, hit this level. Take your 3 or 4 pips off the table, be happy. As these bars develop or candles develop, you can also see the state change yourself. You can see, okay, I know there's going to be a state change. Why? Because it made a higher high. So it's either going to be a higher high, higher low bar, or it's going to be an outside bar. So once again, learning the price action, learning these state changes, you can start to see, really see what price is doing, because it gives you a framework. And there's only 4 states. I mean, you could basically create a little checklist, or you could have 4 file cards. Okay, it's in this state. Now, where's it going to go next? And so you see right here, we're going to have an outside bar. And that's going to be a state change. And one thing that I learned about this, I ran some frequency distributions, and it's pretty interesting. You would think the inside bar would pay off more than the outside bar. At least that's what I would think, but statistics prove me it's just the opposite. But then I thought, well, if you really think about it, an outside bar means that prices kind of hit 2 extremes. And then if price starts to consolidate within that bar's range, when it comes out, it's usually going to be explosive. So right here, price is telling you to go short, or the state change is telling you to take a short. But once again, it made a higher high, came back down, hit the open, and if you're doing any type of day trading right here, that probably would have been a 1 ball, maybe 2 ball, and then on the 3 level ZZ semaphore. And so if you get a ball at the top and then the candle goes from green to red, a lot of times you can take that short right there. So you would have been short just below the open, and you can see here it broke that previous low, and the rest is history so far. But you can see, once again, taking this breakout, it'll give you, a couple of pips to the good. You know, if you're trading, 50 or 100 bucks a pip, you can take money off the table. Even if you're trading, $10 a pip, that's 20 bucks in your pocket. Depending on how much you're trying to make a day. If you're trading 10 bucks a shot, maybe you want to make 100 or 200 a day. Boom, right there. you've already made what? Anywhere from a fifth to a tenth of your daily goal. So, once again, there are 4 states: higher high, higher low, lower high, lower low, higher high, lower low, outside bar, lower high, higher low, inside bar. That's it. And so what I did over here on Stock Fetcher, I was kind of getting crazy with the coding. Let's see, is this the one I want to show? Or is it? Oh, this is the one I'll show. The days since each state. So this tells you how many days since a state. So 9 days since a higher high, higher low. 1 day since a lower high, lower low. 3 days since an inside bar. And it looks like we just had an outside bar. So if we come to the chart, you can see there was an outside bar. Then there was a lower high, lower low. And there was an outside bar there and an inside bar there. And this might have been an inside bar. So once again, using this as price action, you look for a state change. And if you're wondering what the green line is, that's the 20-day low, or 20-day lowest high. This is the 20-day highest low. So the Forex traders will understand that's what we do. But we usually do that, say, on a anywhere from a 1 minute to 1 hour time frame, because we're looking to trade intraday, or rather than, you know, swing trade. But with stocks, you might want to hold them a day or two to maximize profits. So you can see right here, we hit that 20-day lowest high, then it triggered, then it came back down, triggered again, and if you wrote it, there was a nice little profit there on this particular stock. And then once again, it gave you the same signal to ride it again, and then this is where you have to make sure. See, it hit that highest low, started to come down, exit, because if you didn't, the next day you woke up and you had your face ripped off. So that's just one, and I also created some filters that show the state changes, and MCT checker with state display. And the state is when it shows the state change. So you can filter out. Let me just see the stocks that have a state change. So anything other than 0 is a state change. And of course, if you want to, you can sort on that column. Or if you wanted, you could say, I want to see state equals 0. And then you can find out, see all the ones. Now the thing is, I don't think they have not here. No, not doesn't work. That's one of the unfortunate things. You have to do a little math in there to make that happen. Or you can do or. So, fellow traders, if you have any questions about state change, feel free to ask, and there's another breakout for a couple of pips. So I hope you can use this in your learning and in your trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.